I am off leading a seminar right now, so here's some clips from Michael Saylor coming at you. I'm doing a seminar over here, and enjoy Michael Saylor today. See you on the other side.
It's important to understand this idea of digital commodity, because the use case of a digital commodity is not capital creation. That's why all the altcoiners, that's why they don't get, if you have zero money, you can't buy Bitcoin. So if you have zero money, but you're a podcaster, you need to issue a token to raise money. So capital creation is a use case of a token. The use case of a digital commodity is capital preservation and appreciation. If you already have money and you want to store your money for 100 years without worrying about risk, then you want to put it in a savings account. And so traditionally, the king commodity as a long-term money was gold. And what happens is gold demonetizes silver, and silver demonetizes copper, and copper demonetizes glass beads, and they all demonetize the giant stone coin of the Yap people or bales of tobacco. And so Gresham's law says the strongest money wins. In the end, there can be just one. We're all going to go to the strongest form of money. So the strongest form of long-term money, which I'll call capital, is Bitcoin right now. And all these other assets are going to be traded in for Bitcoin. And there's no point creating a second or a third Bitcoin because there's only one network that's going to win. The rest are just going to collapse against it. And Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. And you can see if you lay out this taxonomy, there's 4 quadrants. You need them all. You need short-term money in order to make payments. You need tokens to create capital. You need to tokenize securities, because otherwise, how do you innovate or create more efficiency in the world capital markets? And then you need a commodity to store and protect your capital. I think the last 2 weeks have been extraordinary for Bitcoin and for the strategic Bitcoin reserve, because momentum is really building. 2 weeks ago, there were 3 priorities, or there were 3 things talked about in the digital assets universe. A stablecoin act, right? The Genius bill, and a bill to create stablecoins and issue them in the U.S. And that really addresses the digital currency asset class. And then there's discussion of a market structure bill, and that's to create an entire digital assets framework, presumably to issue something akin to digital tokens or tokenized securities, digital securities. And then there is the strategic Bitcoin bill, or the Bitcoin Act. That was the 3rd priority. And it was a question mark of where that was in DC. There was support, but people were wondering. What happened in the past 2 weeks is the strategic Bitcoin reserve got elevated to a primary, if not the primary priority, with the executive order. So the president created it. And I think there are some very important things that happened. On Thursday night, about a week ago, the president issued the executive order creating the strategic Bitcoin reserve. And in the executive order, designated just Bitcoin to go in the reserve, said we should never, ever sell it. Don't sell the Bitcoin. And then directed the Secretary of Commerce and Treasury to look for budget neutral ways to acquire more Bitcoin. That was the strongest endorsement of any asset, I don't know, in 100 years, I think, by a president of the United States. I think the most important thing said in this industry in 4 years was said Friday night, and I think it missed a lot of people's attention. I don't think people really realize what happened. David Sachs, the crypto czar, went on the All In podcast. And on the All In podcast, he said unequivocally that the US government only recognizes one crypto asset as being decentralized. So what Sachs said was Bitcoin is a decentralized asset, a store of value. That's why it's in the Strategic Bitcoin Reserve. It's the only one. And so what you had was a member of cabinet responsible for digital assets policy, in essence, providing very clear guidance that Bitcoin is a digital commodity, an asset without an issuer. And that's the policy of the United States and the president of the United States. And I think for 4 years, Gary Gensler at the SEC implied that, in 100 different ways, implied that Bitcoin is a commodity and nothing else is. But he implied it in a fairly obscure fashion that was kind of not very constructive, because he implied it by suing everybody else. What you had here was a different administration articulating it, but in a constructive fashion, because what Sachs said is Bitcoin is the asset without the issuer. If there are other crypto assets in the future that prove to be decentralized, we will consider them when the time comes. So we're not dismissing the possibility there would be another commodity, but right now we recognize one, and our agenda is to provide a legitimate framework to issue digital currencies, digital tokens, and digital securities. And of course, the president directed that should come to his desk by August. He said, I want to see it by August. He's actually said in the first executive order, he said within 6 months, so by late July. There is no second best. I've implied that and said that, and I've spent $33 billion based on that. So yeah, it was my view 4.5 years ago, there's one digital commodity. But Christine, there's a more important point here. Even if there was a second, third, and fourth, like let's take the fork wars, Bitcoin Cash, Bitcoin Satoshi Vision. Even if you fork Bitcoin and you maintain that's a commodity, they're all going to zero if the use case is store of value or cap or money, right? Because if you were to fork Bitcoin and claim it's decentralized, the free market is going to pick the strongest network, and it's going to be monetized, and everything else is going to zero. So it doesn't matter from a practical point of view. My position is not that you couldn't theoretically create another digital commodity. For example, if China forked Bitcoin and declared China coin, and then said it's legal to mine China coin and it's tax-free to hold China coin and you can bank China coin in China, in theory, the power of a nation state could create digital property in China. Just like for example, I acknowledge that real estate in China is an asset without an issuer. I just don't want to own it, right? Like an American doesn't want to own Chinese real estate. An American wouldn't want to own China coin. But in theory, if you understand the economic theory of a crypto commodity, you could create it. It's just very unlikely at this point you can ever create a global money that's a crypto commodity, because Bitcoin has $1 trillion of smart money behind it. And the next best thing doesn't have even 1%. I mean, less than 1% of that.